Chapter 2 Final Accounts, that is, Financial Statements of Partnership Firm. Number 1. Introduction. Similar to the sole proprietor, the partnership firms also prepare its final accounts from the trial balance with the consideration of the adjustments at the end of the year to know the earned profit or incurred losses as well as the financial status of the business. In the final accounts of a partnership firm, trading account, profit and loss account, profit and loss appropriation account, partners' capital accounts, current accounts, and balance sheets are prepared. Number 2. Objectives of final accounts of partnership firm. Number 1. To ascertain gross profit or loss. A partnership firm can ascertain gross profit or loss through the preparation of trading account. Number 2. To ascertain net profit or loss. A partnership firm can ascertain net profit or loss through the preparation of profit and loss account. The profitability of the firm can be seen from the profit and loss account. Number 3. To ascertain divisible profit or loss. All personal transactions and provisions of the partners with the firm can be ascertained through the preparation of profit and loss appropriation account. Number 4. To know financial status of the firm. To know the financial status of the firm, balance sheet is prepared. It provides information about assets, receivables, payables, and capital of the firm. Number 5. For taxation purpose. To know the taxable income of the firm, final accounts are prepared. Number 3. Final accounts of partnership firm. Annual financial statements of the firm are prepared as follows with the consideration of balances recorded in the trial balance at the end of the accounting year and adjustments. Number 1. Trading account. Transactions pertaining to receipt and issue of goods, purchase of goods, and production-related expenses are recorded in the trading account. To ascertain gross profit or loss on the basis of these transactions, account which is prepared is known as the trading account. At the debit side of the trading account, opening stock, purchase minus purchase return, as well as outward of goods due to other reason like withdrawal of goods, goods destroyed by fire, goods distributed as sample, goods given for donation are recorded. Purchase expenses like wages, carriage inward, freight, and production expenses like factory expense, rent, taxes, electricity, fuel, coal, gas, royalty, depreciation on plant, etc. are also disclosed. At the credit side of trading account, sales minus sales return, sale of scrap and closing stock of goods are disclosed. When trading account is closed and if total of credit side of trading account is more than debit side, difference is shown at debit side which is considered as gross profit. This gross profit is transferred to the credit side of profit and loss account. If total of debit side is more than credit side, difference is shown at credit side which is considered as gross loss. This gross loss is transferred to debit side of profit and loss account. Specimen of trading account. Trading for the period of ending on dash of dash. On the debit side, particular amount. To opening stock, to purchase, less purchase return, less outward of goods, to purchase expenses, wages, carriage inward, railway freight, transportation cartage, port charge, demurrage, wharfage, to production expenses, production wages, royalty, factory expenses, that is rent, taxes, electricity, fuel, coal, gas, consumable stores, that is oil, grease, to factory depreciation account, to plant machinery depreciation account, to profit and loss, that is gross profit. On the credit side, by sales, less sales return, by sale of scrap account, by closing stock, by profit and loss account, that is gross loss. Number 2. Profit and loss account. To ascertain net profit or loss, profit and loss account is prepared. At the debit of profit and loss account, gross loss transferred from trading account, administrative, expenses, sales, distribution expenses, financial expenses, depreciation on assets, sundry expenses, and other losses of the firm are shown. While at the credit side, gross profit transferred from the trading account, incomes of business like interest received, rent received, commission received, dividend, brokerage, bad debts returned, profit on sale of asset, and other incomes are shown. When profit and loss account is closed and if the total of credit side is more than the debit side, difference is shown at the debit side, which is considered as the net profit. This net profit is transferred at the credit side of the profit and loss appropriation account. When total of debit side is more than the credit side, difference is shown at the credit side, which is considered as the net loss. This net loss is transferred to the debit side of the profit and loss appropriation account. Specimen of profit and loss account. Profit and loss account for the period ending on the debit side, particular to trading account, that is gross loss, to administrative expenses, trading expenses, salary, allowance, bonus, rent, insurance premium, taxes, postage, printing and stationery, legal charges, audit fees, electricity expense, contribution to provident fund, to sales distribution expense, carriage outward, salesman salary commission, advertisement expenses, discount allowed, discount reserve, expenses of showroom, godown expense, packing expense, to financial expenses, interest on partner's loan, interest on bank overdraft, interest on borrowed loan, bank charges commission, manager commission, to other expenses loss, donation expense, office assets depreciation, bad debts trial balance plus bad debts adjustment plus bad debts reserve adjustment less bad debts reserve trial balance, loss due to fire, loss due to theft, loss on sale of asset, provision for expense or loss, to profit and loss appropriation account, that is net profit. On the credit side, by trading account, that is gross profit, by incomes, discount received, rent received, commission received, brokerage received, consignment commission received, interest on investment, interest on loan lent, bad debts returned, profit on sale of asset, sale of old newspapers, income from scrap, sundry income, by profit and loss appropriation account, that is net loss. Number 3. Profit and loss appropriation account. To disclose the distribution of profit and loss between the partners, profit and loss appropriation account is prepared in a partnership firm. Profit and loss appropriation account is a part of profit and loss account only. The separate preparation of it is not mandatory. At the debit side of the profit and loss appropriation account, net loss transferred from profit and loss account, interest on partner's capital, interest on credit balance of current accounts, bonus, commission, salary, and remuneration to partners amount transferred to general reserve account are shown. At the credit side of profit and loss appropriation account, net profit transferred from profit and loss account, interest on drawings of partners, interest on debit balance of current accounts, etc. are shown. When profit and loss appropriation account is closed and if the total of credit side of it is more than the debit side, the difference is recorded at the debit side and it is considered as the divisible profit. This divisible profit is credited to partners' capital accounts or to partners' current accounts when fixed capital account is maintained in their profit and loss sharing ratio. While total of debit side is more than difference is recorded at the credit side, which is considered as the divisible loss. This divisible loss is debited to partners' capital accounts or current account in their profit or loss sharing ratio. Note, when separate profit and loss appropriation account is not prepared to ascertain divisible profit or loss, all items of profit and loss appropriation account are shown in profit and loss account. This divisible profit or loss is transferred to partners' capital accounts. This is explained as an optional treatment, not to be asked in examination. Specimen of profit and loss appropriation account. Profit and loss appropriation account for the year ending on the debit side, to net loss, that is from profit and loss account, to interest on partners' capital account A, B, to interest on credit balance of current account of partners account, to salary, bonus, commission, remuneration to partner account, to general reserve account, to partner's capital or current account. Divisible profit A, B. On the credit side, by net profit from profit and loss account, to interest on partner's drawings account A, B. By interest on debit balance of current account of partner account, by partner's capital or current account, divisible loss A, B. Partner's capital accounts. Partners of a partnership firm undertake personal transactions with the firm. To record such transactions, capital account of each partner is prepared in the books of the firm. Transactions which increase the capital of partner are recorded at the credit side, and transactions which reduce the capital of partner are recorded at the debit side of the capital account. First of all, the opening capital of a partner is written at the credit side of the capital account, and subsequently, if additional capital introduced, it also credited. At debit side, capital returned to the partner is recorded. When partner's capital accounts are closed, the total of credit side generally remains more. Thus, difference is written at the debit side. This is known as the closing balance. This balance is shown at the capital liability side as a permanent capital. Specimen of partner's capital accounts. Partner's capital accounts. On the debit side, date to cash, bank, other asset account, withdrawal of capital A, B, 31st March to balance carried down, closing credit balance A, B. On credit side, 1st April, by balance brought down, opening capital A, B. By cash, bank, other asset account, additional capital A, B. Number 5. Partners' current accounts. There are personal transactions between partners and partnership firm other than the permanent capital. To record these transactions, accounts which are prepared are known as partners' current accounts. At the credit side of partners' current accounts, opening credit balance of current account, interest on capital, interest on credit balance of current accounts, salary, bonus, commission and bonus to partners, share in divisible profit, etc. are recorded. On the debit side of the current account, opening debit balance of current account, if any, drawings, interest on drawings, interest on debit balance of current accounts, share in divisible loss, etc. are recorded. When current account is closed and if the total of credit side is more than the debit side, difference is shown at the debit side. This is known as the closing balance. The balance is shown at the capital liability side of the balance sheet. If the total of debit side is more, difference is shown at credit side. This is also known as the closing balance, but this balance is shown at asset side of the balance sheet. Specimen of partners' current accounts. Partners' current accounts. On debit side, 1st April to balance brought down, opening debit balance of current account A, B. To drawings account, 31st March to interest on drawings account, 31st March to interest on debit balance of current account, 31st March to divisible loss, 31st March to balance carried down, closing credit balance. On the credit side, 1st April by balance brought down, opening credit balance, 31st March by interest on capital account, 31st March by interest on credit balance of current account, 31st March by salary, bonus, commission, remuneration account, 31st March by divisible profit, 31st March by balance carried down, closing debit balance. Number 6. Balance sheet. To know the financial status of the firm, balance sheet is prepared at the end of an accounting year. Balance sheet is a statement where on one side of it, amount of capital and liability and on another side, amount of assets are disclosed. At capital and liability side of balance sheet of the partnership firm, the balance of permanent capital accounts, credit balances of current accounts, creditors, bills payable, bank overdraft, expenses outstanding, incomes received in advance, loan borrowed, partner's loan, interest outstanding on partner's loan is disclosed. Besides, general reserve and other reserves etc. are also disclosed. At the asset side of the balance sheet, fixed assets, investments, current and liquid assets like closing stock, debtors, cash balance, bank balance, bills receivables, incomes due but not received, prepaid expenses, loan lent, deferred revenue expenses, debit balance of current accounts etc. are disclosed. Specimen of balance sheet. Balance sheet as at of capital liabilities. Fixed capital accounts A, B. Current accounts. Credit balance A, B. Reserves. General reserve, capital reserve, other reserve. Non-current liabilities. Loan from bank, loan from financial institutions, loan from friends, partners loan. Current liabilities. Bank overdraft, sundry creditors, bills payable, expenses outstanding, income received in advance, taxation provision, provident fund, interest outstanding on partners loan. On the asset side, non-current assets, fixed assets, tangible assets, land, building, leasehold properties, vehicles, machines, furniture and fittings, intangible assets, patent, trademark, copyright, goodwill, investments, investments in government securities, investment of provident fund, other non-current assets, deferred revenue expense, current assets, closing stock, sundry debtors, cash balance, bank balance, incomes due, loan lent, bills receivable, prepaid expenses, current accounts, in case of debit balance A, B. Number 4. Adjustments of final accounts of partnership firm. At the end of an accounting year, to give complete shape to accounts, adjustments and adjustment entries are recorded. Adjustment entries and their accounting effect in an annual account of a firm are as under: adjustments, adjustment entries and their effect in annual accounts. Number 1. Adjustment, closing stock. Adjustment entry, closing stock account debit to trading account. Effect in annual accounts, asset side of balance sheet, credit side of trading account. Number 2. Outstanding expense, respective expense account debit to outstanding expense account. Debit side of trading, profit and loss account add to its respective expense. Capital and liability side of balance sheet. Number 3. Prepaid expense, prepaid expense account debit to respective expense account. Asset side of balance sheet, debit side of trading, profit and loss account deducted from respective expense. Number 4. Receivable income, receivable income account debit to respective income account. Credit side of profit and loss added to respective income. Asset side of balance sheet. Number 5. Income received in advance, respective income account debit to income received in advance account. Liability side of balance sheet, credit side of profit and loss account deduct from respective income. Number 6. Depreciation on assets, depreciation account debit to respective asset account. Debit side of profit and loss account, asset side of balance sheet deduct from respective asset. Number 7. Bad debts written off, that is new or additional. Bad debts account debit to debtors account. Debit side of profit and loss account add it old bad debts. Asset side of balance sheet deduct from debtors. Number 8. Bad debts reserve, profit and loss account debit to bad debts reserve account. Debit side of profit and loss account, asset side of balance sheet deduct from debtors. Number 9. Discount reserve on debtors, profit and loss account debit to discount reserve account. Debit side of profit and loss account, asset side of balance sheet deduct from debtors. Number 10. For unrecorded credit purchase, purchase account debit to creditors account. Debit side of trading account add it to purchase. Liability side of balance sheet add it to creditors. Number 11. For unrecorded credit sales, debtors account debit to sales account. Asset side of balance sheet add it to debtors. Credit side of trading account add it to sales. Number 12. Unrecorded credit purchase return, creditors account debit to purchase return account. Liability side of balance sheet deduct it from creditors. Debit side of trading account deduct it from purchase. Number 13. For unrecorded credit sales return, sales return account debit to debtors account. Credit side of trading account deduct it from sales. Asset side of balance sheet deduct it from debtors. Number 14. Purchase return record to sales book. Number 1. Sales account debit to debtors account. Number 2. Creditors account debit to purchase return account. Credit side of trading account deduct it from sales. Asset side of balance sheet deduct it from debtors. Liability side of balance sheet deduct it from creditors. Debit side of trading account, deduct it from purchase account. Number 15. Sales return recorded to purchase book. Number 1. Creditors account debit to purchase account. Number 2. Sales return account debit to debtors account. Liability side of balance sheet, deduct it from creditors. Debit side of trading account, deduct it from purchase. Credit side of trading account, deduct it from sales. Asset side of balance sheet, deduct it from debtors. Number 16. Credit purchase recorded to sales book. Number 1. Sales account debit to debtors account. Number 2. Purchase account debit to creditors account. Debit side of trading account, deduct from sales. Asset side of balance sheet, deduct from debtors. Debit side of trading account, add it to purchase. Liability side of balance sheet, add it to creditors. Number 17. Credit sales recorded to purchase book. Number 1. Creditors account debit to purchase account. Number 2. Debtors account debit to sales account. Liability side of balance sheet, deduct it from creditors. Debit side of trading account, deduct it from purchase. Asset side of balance sheet, add it to debtors. Credit side of trading account, add it to sales. Number 18. Interest on capital. Interest on capital account debit to capital account. Debit side of profit and loss appropriation account. Liability side of balance sheet, add it to capital account. Number 19. Interest on drawings. Drawings account debit to interest on drawings account. Liability side of balance sheet, add it to drawings. Credit side of profit and loss appropriation account. Number 20. Salary to partners. Partners salary account debit to partners capital account. Debit side of profit and loss appropriation account. Credit side of partners current or capital account. Number 21. Interest on credit balance of current account of partners. Interest on partners current account debit to partners current account. Debit side of profit and loss appropriation account. Credit side of partners current account. Number 22. Interest on debit balance of current account of partners. Partners current account debit to interest on partners current account. Debit side of partners current account. Credit side of profit and loss appropriation account. Number 23. Outstanding interest on partners loan. Interest on loan account debit to outstanding interest on partners loan account. Debit side of profit and loss account. Liability side of balance sheet. Number 24. Transfer to general reserve. Profit and loss appropriation account debit to general reserve account. Debit side of profit and loss appropriation account. Liability side of balance sheet, add it to general reserve. Number 25. Commission payable to partners. Partners commission account debit to partners capital account. Debit side of profit and loss appropriation account. Credit side of current or capital account of partners. Number 26. Interest on advanced loan. Outstanding interest on loan account debit to interest on loan account. Asset side of balance sheet account. Credit side of profit and loss account. Number 27. Amortization of intangible assets like goodwill, patent, trademark, copyright. Profit and loss account debit to intangible asset account. Debit side of profit and loss account. Asset side of balance sheet. Deduct it from intangible asset. Number 28. Unrecorded goods withdrawn for personal use. Drawings account debit to purchase account. Liability side of balance sheet, add it to drawings. Debit side of trading account, deduct it from purchase. Goods issued for free sample. Advertisement account debit to purchase account. Debit side of profit and loss account. Credit side of trading account, deduct it from purchase. Number 30. Stationery stock. Stationery stock account debit to stationery expense account. Asset side of balance sheet. Debit side of profit and loss account, deduct it from stationery expense. Number 31. Writing off leasehold property. Profit and loss account debit to leasehold property account. Debit side of profit and loss account. Asset side, deduct it from leasehold property. Number 32. Receivable interest or dividend on shares and other investments. Receivable interest or dividend account debit to interest or dividend account. Asset side of balance sheet. Credit side of profit and loss account. Number 33. Personal asset introduced by partner. Asset account debit to partner's capital account. Asset side of balance sheet, liability side of balance sheet, add it to capital of partner. Illustration 1. Ram and Shyam are partners of a firm sharing profit loss in the ratio of 6:4. From the following trial balance dated 31st March 2017 and adjustments, prepare annual accounts of the firm. Trial balance of partnership firm of Ram and Shyam as on 31st March 2017. On the debit balance, drawings Ram 18,000, Shyam 16,000. Debtors 45,000. Stock 1st April 2016 25,000. Sales return 1,000. Cash balance 10,000. Purchase 60,000. Discount allowed 500. Bad debts 400. Machines, office 18,250. Depreciation on machines 1,750. Furniture 8,000. Sundry expenses 1,500. Leasehold building for 4 years 7,000. Goodwill 40,000. Trading expenses 1,250. Rent and taxes 5,000. Carriage inward 400. Bank interest 500. Insurance premium 800. Salary 15,000. Wages 14,000. Prepaid insurance 200. Total of debit balance is 2,89,550. On the credit balance, capital Ram 80,000, Shyam 70,000, creditors 35,000, purchase return 1,500, bank overdraft 8,000, sales 78,150, bad debts reserve 700, outstanding wages 1,000, 8% Geeta's loan 1st October 2016 15,000, bills payable 200. Total of credit balance is 2,89,550. Adjustments. Number 1. Closing stock value Rs 45,000. Its market value is 10% more. Number 2. 5% interest on partner's capital is chargeable and on drawings 10% interest is recoverable. Number 3. Provide 10% depreciation on machine and 5% on furniture. Number 4. Provide 5% bad debts reserve on debtors. Number 5. Outstanding expenses, salary Rs 500, sundry expenses Rs 150 and rent Rs 150. Number 6. As per partnership agreement, interest on capital is payable even in loss. Answer. Trading account of partnership firm of Ram and Shyam for the year ending on 31st March 2017. On the debit side, to opening stock 25,000, to purchase 60,000, minus purchase return 1,500, total 58,500, to wages account 14,000, to carriage inward account 400, to profit and loss account gross profit 24,250. Total of debit balance 1,22,150. On the credit side, by sales 78,150 minus sales return 1,000. Total 77,150. By closing stock 45,000. Total of credit balance 1,22,150. Profit and loss account of partnership firm of Ram and Shyam for the year ending on 31st March 2017. On the debit side, administration expense to salary 15,000 plus outstanding 500, total 15,500. To sundry expense 1,500 plus outstanding 150, total 1,650. To trading expense account 1,250. To rent and taxes 5,000 plus outstanding 150, total 5,150. To insurance premium 800. Selling distribution expense. To discount allowed 500. Financial charges. To bank interest 500. To interest on Geeta's loan 600. Other expense loss. To bad debts old 400 plus bad debts reserve new 2,250. Total 2,650 minus by bad debts reserve old 700, total 1,950 to depreciation machinery office 2,000 plus furniture 400, total 2,400 to leasehold building written off 1,750, total debit balance 32,050. On the credit side, by trading account, gross profit 24,250. By profit and loss appropriation account, net loss 7,800. Total of credit balance 32,050. Profit and loss appropriation account of partnership firm of Ram and Shyam for the year ending on 31st March 2017. On the debit side, to profit and loss account, gross loss 7,800. To interest on capital, Ram 4,000, Shyam 3,500. Total 7,500. Total of debit side 15,300. On the credit side, by interest on drawings account, Ram 1,800, Shyam 1,600, total 3,400. By partners capital account, loss Ram 7,140, Shyam 4,760, total 11,900. Total of credit balance 15,300. Partners capital account. On debit side, 31st March 2017 to drawing account, Ram 18,000, Shyam 16,000. 31st March 2017 to interest on drawings account, Ram 1,800, Shyam 1,600. 31st March 2017 to profit and loss appropriation account, divisible loss, Ram 7,140, Shyam 4,760. 31st March 2017 to balance carried down, Ram 57,060, Shyam 51,140. Total Ram 84,000, Shyam 73,500. On credit side, 1st April 2016, by balance brought down, Ram 80,000, Shyam 70,000. 31st March 2017, by interest on capital account, Ram 4,000, Shyam 3,500. Total Ram 84,000, Shyam 73,500. 1st April 2017, by balance brought down, Ram 57,060, Shyam 51,140. Balance sheet of partnership firm of Ram and Shyam as on 31st March 2017. Capital liabilities, capital Ram 57,060, Shyam 51,140, total 1,08,200. Non-current liabilities, 8% Gita's loan 15,000, current liabilities, bank overdraft 8,000, interest on Gita's loan 600, creditors 35,000. Outstanding expenses, salary 500, sundry expenses 150, rent taxes 150, total 800. Outstanding wages 1,000, bills payable 200. Total of capital liability 1,68,800. On assets or debt side, non-current assets, fixed assets, tangible assets, machines 20,000 minus depreciation 2,000, total 18,000. Furniture 8,000 minus depreciation 400, total 7,600. Leasehold property 7,000 minus written off 1,750, total 5,250. Non-tangible assets, goodwill 40,000. Current assets, closing stock 45,000. Debtors 45,000 minus bad debts 2,250, total 42,750. Cash balance 10,000. Prepaid insurance 200. Total of assets, debts 1,68,800. Note: Number 1. Interest for 6 months will be calculated at the rate of 8% on Gita's loan is equals to 15,000 into 8 upon 100 into 6 upon 12 is equals to rupees 600. Number 2. Leasehold property is acquired for 4 years for rupees 7,000. Therefore, during current year, 7,000 divided by 4 is equals to rupees 1750 will be amortized. Number 3. Depreciated price rupees 18,250 plus depreciation rupees 1,750 is equals to rupees 20,000 pre-depreciation price. Calculated depreciation is equals to 1,750 divided by 20,000 into 100 is equals to 8.75%. Now, rupees 2,000 depreciation will be calculated at the rate of 10% on rupees 20,000. Illustration 2. From the trial balance and adjustment of partnership firm of Salim and Shabana, prepare final account of partnership firm. Trial balance of partnership firm of Salim and Shabana as on 31st March 2017. Particulars: ledger folio, debit balance, credit balance. Capital account, Salim, credit balance 1,60,000, Shabana, credit balance 1,20,000. Current accounts, Salim, debit balance 10,000, Shabana, credit balance 40,000. Stock of goods, 31st March 2017, debit balance 54,600. Cash balance, debit balance 560. Current account with bank, debit balance 14,000. Fixed deposit of SBI, debit balance 80,000. Debtors creditors, debit balance 36,800, credit balance 24,000. Salary, debit balance 37,000. Land building, debit balance 1,20,000. Plant machinery, debit balance 40,000. Furniture, debit balance 10,000. Insurance premium, debit balance 2,000. Leasehold machinery from 1st April 2016 for 5 years, debit balance 60,000. Stationery and printing, debit balance 1,200. Bad debts reserve, debit balance 400, credit balance 2,000. Advertisement expense, debit balance 1,200. Traveling expense, debit balance 800. Trading account, credit balance 61,800. Loan of Shabana from 1st October 2016, credit balance 60,000. Discount reserve, credit balance 760. Total of debit side 4,68,560. Total of credit side 4,68,560. Adjustments. Number 1. Salim withdraw goods of rupees 4,000 for personal use. It is recorded in the books. Number 2. Goods of rupees 8,000 purchased at the end of the accounting year, which is not recorded. Number 3. Prepaid insurance is rupees 400. Number 4. From debtors, rupees 800 is not recoverable. Provide 5% bad debts reserve on debtors. Number 5. Discount reserve on debtors is not required. Number 6. Provide depreciation on plant machinery at 20% and on furniture at 5%. Answer. As per trial balance, gross profit 68,000 minus unrecorded purchase 8,000 plus Salim withdraw goods for personal use 4,000, total 4,000. Revised gross profit 57,800. Profit and loss account of partnership firm of Salim and Shabana for the year ending on 31st March 2017. On debit side, particulars: administrative expenses to salary 37,000, to insurance premium 2,000, minus prepaid 400, total 1,600, to stationery and printing 1,200, to travelling expense 800, sales and distribution expenses, to advertisement expense 1,200, financial expenses, to interest on loan at 6%, Shabana 1,800, other expenses and loss, to bad debts from trial balance 400 plus bad debts from adjustment 800 plus bad debts reserve from adjustment 1,800, total 3,000. Minus bad debts reserve from trial balance 2,000, total 1,000. To depreciation, plant and machinery 8,000 plus furniture 500, total 8,500. To return off leasehold machinery 12,000. Total on debit side 65,100. On credit side, by trading account, revised gross profit 57,800, by discount reserve on 760, by Profit and Loss Appropriation Account, net loss 6,540. Total of credit side 65,100. Profit and Loss Appropriation Account for the year ending on 31st March 2017. On debit side, to Profit and Loss Account, net loss 6,540. Total of debit side 6,540. On credit side, by current account, divisible loss 1:1, Salim 3,270, Shabana 3,270. Total of credit side 6,540. Partners current accounts, debit side, date, particular, Salim, Shabana. 1st April 2016, to balance brought down, Shabana 10,000. 31st March 2017, to drawing account, Salim 4,000. 31st March 2017, to Profit and Loss Appropriation Account, divisible loss, Salim 3,270, Shabana 3,270. 31st March 2017, Salim 32,730. Total, Salim 40,000, Shabana 13,270. 1st April 2017, to balance brought down, Shabana 13,270. On credit side, 1st April 2016, by balance brought down, Salim Rs 40,000. 31st March 2017, by balance carried down, Shabana 13,270. Total, Salim Rs 40,000, Shabana Rs 13,270. 1st April 2017, by balance brought down, Salim 32,730. Balance sheet as on 31st March 2017. Capital liabilities, amount, asset debits, amounts. Capital accounts, Salim 1,60,000, Shabana 1,20,000. Current account, Salim 32,730. Liabilities, loan of Shabana 60,000, creditors 24,000 plus unrecorded purchases 8,000, total 32,000. Outstanding interest on loan of Shabana 1,800. Total of capital liabilities 4,06,530. Assets and debits. Fixed assets, land building 1,20,000, plant machinery 40,000, less depreciation 8,000, total 32,000. Furniture 10,000, less depreciation 500, total 9,500. Leasehold machinery 60,000 minus written off 12,000, total 48,000. Investments, fixed deposit of SBI 80,000. Current assets and advances. Closing stock 54,600, debtors 36,800, less bad debts from adjustment 800, total 36,000, less bad debts reserve from adjustment 1,800, total 34,200. Cash balance 560, current account with bank 14,000, prepaid insurance premium 400, current account Shabana 13,270. Total of assets debts 4,06,530. Illustration 3. Trial balance of partnership firm of Yash and Jash as on 31st March 2017 is as follows. Trial balance of partnership firm of Yash and Jash as on 31st March 2017. Debit balances. Drawing. Yash 8,000, Jash 4,000. Stock 1st April 2016 24,000. Customers 29,000. Purchase 1,30,800. Wages 2,000. Bills receivable 6,000. 6% investments 1st April 2016 10,000. Salary 12,000. Cash balance 3,500. Discount allowed 1,400. Goods returned 2,400. Bad debts 400. Stationery expenses 800. Office expenses 2,300. Motor car 52,000. Building 60,200. Prepaid office expense 1,200. Total 3,50,000. Credit balances. Capital account Yash 50,000. Jash 40,000. Suppliers 16,400. Sales 2,04,000. Bills payable 8,000. Interest on investment 300. Bank overdraft 24,260. Goods returned 2,800. Rent received 600. Discount received 400. Bad debts reserve 2,000. Goods withdrawn for personal use 740. Outstanding wages 500. Total 3,50,000. Adjustments. Number 1. Interest at 5% on capital and at 10% on drawings for 6 months. Number 2. Closing stock Rs 15,000 having market value Rs 12,000. Number 3. Outstanding stationery expense Rs 500. Number 4. Prepaid wages Rs 400. Number 5. Rent received in advance Rs 200 and discount is receivable Rs 40. Number 6. From debtors written off Rs 1,000 as bad debts, provide 5% bad debts reserve and 2% discount on reserve on debtors. Number 7. Provide 10% depreciation on motor car. Number 8. Goods worth Rs 2,000 destroyed by fire. Insurance company has admitted claim of 80%. Number 9. 10% commission is payable to judge from profit after deduction of commission from profit. Prepare annual accounts of partnership firm. Trading account of partnership firm of Yash and Jash as on 31st March 2017. On debit side, to opening stock 24,000, to purchase 1,30,800 minus purchase return 2,800, total 1,28,000, minus goods withdrawn for personal use 740, total 1,27,260, minus goods destroyed by fire 2,000, total 1,25,260, to wages 2,000, minus prepaid 400, total 1,600, to profit and loss account, gross profit 62,740, total of debit side 2,13,600, on credit side by sales 2,04,000, minus sales return 2,400, total 2,01,600. By closing stock 12,000, total on credit side 2,13,600. Profit and loss account of partnership firm of Yash and Jash as on 31st March 2017. On debit side, administrative expenses to salary 12,000, to stationery expense 800 plus outstanding 500, total 1,300, to office expense 2,300, selling and distribution expense to discount allowed 1,400, plus to discount reserve on debtors from adjustment 532, total 1,932. Other expenses and losses to bad debts old 400 plus to bad debts new 1,000 plus to bad debts reserve new 1,400, total 2,800, minus to bad debts reserve old 2,000, total 800. Depreciation motor car 5,200, loss on goods destroyed by fire 400. To profit and loss appropriation account, net profit 40,248, total 64,180. On credit side, by trading account, gross profit 62,740, by interest on investment 300, plus outstanding 300, total 600, by rent 600, minus received in advance 200, total 400, by discount received 400, plus outstanding 40, total 440, total 64,180. Profit and loss appropriation account of partnership firm of Yash and Jash as on 31st March 2017. On debit side, to interest on capital account, Yash 2,500, Jash 2,000, total 4,500. To Jash's commission account 3,304. To partners capital account, divisible profit, Yash 16,522, Jash 16,522, total 33,044, total 40,848. On credit side, by profit and loss account, net profit 40,248, interest on drawings, Yash 400, Jash 200, Total 600. Total 40,848. Note. Number 1. Profit and loss sharing ratio is in equal proportion. Number 2. Just commission is equals to 36,348 into 10 upon 110 is equals to rupees 3,304.36 is equals to rupees 3,304. Partners Capital Account. On debit side, 31st March 2017 to drawings account, Yash 8,000, Jash 4,000. 31st March 2017 to interest on drawings account, Yash 400, Jash 200. 31st March 2017 to balance carried down, Yash 60,622, Jash 57,626. Total of debit side, Yash 69,022, Jash 61,826. On credit side, 1st April 2016 by balance brought down, Yash 50,000, Jash 40,000. 31st March 2017 by interest on capital account, Yash 2,500, Jash 2,000. By commission account, Jash 3,304. 31st March 2017 by profit and loss appropriation account, divisible profit, Yash 16,522, Jash 16,522. Total of credit side, Yash 69,022, Jash 61,826. Balance sheet of partnership firm of Yash and Jash as on 31st March 2017. Capital liabilities, capital account, Yash 60,622, Jash 57,626. Total 1,18,248. Non-current liabilities, current liabilities, bank overdraft 24,260. Bills payable 8,000. Suppliers 16,400. Outstanding wages 500. Outstanding stationery expense 500. Rent received in advance 200. Total of capital liabilities 1,68,108. Assets and debts. Non-current assets. Fixed assets. Building 60,200. Motor car 52,000. Less depreciation 5,200. Total 46,800. 6% investment 10,000. Current assets. Closing stock 12,000. Customers 29,000. Less bad debts adjustment 1,000. Total 28,000. Less bad debts reserve from adjustment 1,400. Total 26,600. Less discount reserve 532. Total 26,068. Cash balance 3,500. Discount receivable 40. Bills receivable 6,000. Prepaid office expenses 1,200. Prepaid wages 400. Receivable interest on investment 300. Insurance company claim amount 1,600. Total of assets debts 1,68,100. Illustration 4. Dhara and Meera are partners sharing profit loss in the proportion 3:2. Final accounts of their partnership firm are as follows. Trading account and profit and loss account of partnership firm of Dhara and Meera for year ending on 31st March 2017. On debit side, to cost of goods sold 4,64,000, to office expense 80,000, to showroom rent 10,000, to packing expense 12,000, to bad debts 8,000, to advertisement expense 14,000, to selling distribution expense 20,000, to financial expense 6,000, to sundry expense 16,000, to salary 8,000, to tax insurance 2,000. Net profit Dhara 91,200, Meera 60,800. Total 1,52,000. Total of debit side 7,92,000. On credit side, by sales 7,84,000. By sundry income 7,000. By bad debts returned 1,000. Total of credit side 7,92,000. Balance sheet of partnership firm of Dhara and Meera as on 31st March 2017. Capital liabilities, capital accounts, Dhara Opening capital 1,60,000 plus net profit 91,200, total 2,51,200 less drawings 48,000, total 2,03,200. Meera, opening capital 1,20,000 plus net profit 60,800, total 1,80,800 less drawings 24,000, total 1,56,800. Creditors 32,000, bills receivable 8,000. Total of capital liabilities 4 lakh. On assets and debts, non-current assets, fixed assets, building 2,40,000, plant and machinery 20,000, furniture 20,000, investments 24,000, current assets, cash balance 10,000, bank balance 25,000, bills receivable 5,000, debtors 56,000. Total of asset debts 4 lakhs. After preparation of annual accounts, it is found that number 1, 5% interest on capital is not calculated. Number 2, 10% depreciation on building is to be provided. Number 3, prepaid salary is of Rs 400. Number 4, interest on investment is not received 800. Number 5, bad debts reserve of Rs 1,200 is to be mentioned. Number 6, credit purchase of Rs 1,600 is not recorded. Prepare revised trading account, profit and loss account, profit and loss appropriation account and balance sheet. Revised trading account of partnership firm of Dhara and Meera for the year ending on 31st March 2017. On debit side, to cost of goods sold 4,64,000 plus unrecorded purchases 1,600, total 4,65,600. To profit and loss account, gross profit 3,18,400. Total of debit side 7,84,000. On credit side, by sales 7,84,000. Total of credit side 7,84,000. Revised profit and loss account for the year ending on 31st March 2017. On debit side, to office expense 80,000, to salary 8,000, less prepaid 400, total 7,600. To tax insurance 2,000, to sundry expense 16,000, to selling distribution expense 20,000, to advertisement expense 14,000, to packing expense 12,000, to showroom rent 10,000, to financial expenses 6,000, to bad debts from trial balance 8,000 plus bad debts reserve from adjustment 1,200, total 9,200. To depreciation, building 24,000. To profit and loss appropriation account, net profit 1,26,400. Total of debit side 3,27,200. On credit side, by trading account, gross profit 3,18,400. By sundry income 7,000. By bad debts return 1,000. By interest on investments 800. Total of credit side 3,27,200. Profit and loss appropriation account for the year ending on 31st March 2017. On debit side, to interest on capital at 5%, Dhara 8,000, Meera 6,000, total 14,000. To capital account, divisible profit 3:2, Dhara 64,440, Meera 44,960, total 1,12,400. Total of debit side 1,26,400. On credit side, by profit and loss account, net profit 1,26,400. Total of credit side 1,26,400. Partners' current accounts. On debit side, to drawings account, Dhara 48,000, Meera 24,000. 31st March 2017, to balance carried down, Dhara 1,87,440, Meera 1,46,960. Total of debit side, Dhara 2,35,440, Meera 1,70,960. On credit side, 1st April 2016, by balance brought down, Dhara 1,60,000, Meera 1,20,000. 31st March 2017, by interest on capital, Dhara 8,000, Meera 6,000. 31st March 2017 by Profit and Loss Appropriation Account divisible profit Dhara 67,440, Meera 44,960. Total of credit side Dhara 2,35,440, Meera 1,70,960. Balance sheet as on 31st March 2017. Capital liabilities, capital account Dhara 1,87,440, Meera 1,46,960. Total 3,34,400. Creditors 32,000 plus unrecorded credit purchase 1,600. Total 33,600. Bills payable 8,000. Total of capital liabilities 3,76,000. Asset debts building 2,40,000. Less depreciation 24,000. Total 2,16,000. Plant machinery 20,000. Furniture 20,000. Investments 24,000. Debtors 56,000. Less bad debts reserve from adjustment 1,200. Total 54,800. Bills receivable 5,000. Cash balance 10,000. Bank balance 25,000. Prepaid salary 400. Outstanding interest on investment 800. Total of assets debts 3,76,000. Illustration 5. Shiv and Shankar are partners of a firm sharing profit loss in the equal proportion. From following trial balance as on dated 31st March 2017 and adjustments, prepare final accounts of the firm. Trial balance of partnership of Shiv and Shankar as on 31st March 2017. Particular: debit rupees, credit rupees. Capital and drawings. Shiv debit 10,000, credit 1 lakh. Shankar debit 20,000, credit 1,20,000. Opening stock debit 60,000. Purchase and sales debit 61,000, credit 80,000. Carriage inward debit 20,000. Weighing machine charges or tollai debit 1,000. Provident fund and contribution to provident fund debit 1,000, credit 4,000. Debt stock debit 22,000. Salary wages debit 12,000. Loan of Shiv from 1st July 2016 credit 20,000. Mahajan Lago debit 2,000. Factory building debit 1 lakh. Depreciation on factory building debit 10,000. Insurance premium debit 1,200. Prepaid insurance debit 600. Damage debit 200. Cash and bank debit 6,000, credit 18,000. Bills debit 30,000, credit 14,000. Customers and traders debit 20,000, credit 16,000. Professional tax debit 1,000. Outstanding salary credit 1,400. Bad debts and bad debts reserve debit 1,400, credit 6,000. Total of debit side 3,79,400. Total of credit side 3,79,400. Adjustments. Number 1. The value of closing is Rs 40,000 but market value is 20% less than book value. Number 2. Goods were received of Rs 1,000 but invoice is not recorded in the purchase book. Number 3. 10% interest is payable on capital and 5% interest is chargeable on drawings. Number 4. Provide bad debts reserve of Rs 3,000 and keep 10% discount reserve on debtors. Number 5. Shiv has withdrawn goods of Rs 1,000 and Shankar has withdrawn goods of Rs 2,000 for personal use recorded in sales book as credit sales. Number 6. As per partnership deed, interest on capital is payable even if there is loss. Trading account of partnership firm of Shiv and Shankar for the year ending on 31st March 2017. On debit side, to opening stock 60,000, to purchase 61,000, add unrecorded 1,000, total 62,000, less withdrawal of goods 3,000, total 59,000, to depreciation on factory building 10,000, to carriage inward 20,000, to weighing charges 1000. To Mahajan Lagu, 2000. To Demarage, 200. Total of debit side, 1,52,200. On credit side, buy sales 80,000. Less wrongly recorded withdrawal 3,000. Total 77,000. Closing stock 32,000. By profit and loss account, gross loss 43,200. Total of credit side 1,52,200. Profit and loss account of partnership firm of Shiv and Shankar for the year ending on 31st March 2017. On debit side, particular to trading account, gross loss 43,200. Administrative expenses to salary wages 12,000. To professional tax 1,000. To insurance premium 1,200. To contribution in PF 1,000. Selling and distribution expenses, discount reserve on debts 1,400. Other expenses loss. To bad debts from trial balance 1,400. Add bad debts reserve from adjustment 3,000. Total 4,400. Less bad debts reserve from trial balance 6,000. Transfer to credit side minus 1,600. To interest on Shiv's loan at 6% for 9 months 900. Total of debit side 60,700. On credit side, by bad debts reserve account transferred from debit side 1,600. By profit and loss appropriation account, net loss 59,100. Total of credit side 60,700. Profit and loss appropriation account of partnership firm of Shiv and Shankar for the year ending on 31st March 2017. On debit side, to profit and loss account, net loss 59,100. To interest on partners' capital, Shiv 10,000, Shankar 12,000. Total 22,000. Total of debit side 81,100. On credit side, by interest on partners' drawings, Shiv 500, Shankar 1,000. Total 1,500. By partners' capital account, divisible loss, Shiv 39,800, Shankar 39,800. Total 79,600. Total of credit side 81,100. Balance sheet as on 31st March 2017 of partnership firm of Shiv and Shankar. Capital liabilities, Shiv 1 lakh. Add interest on capital 10,000. Total 1,10,000. Less loss 39,800. Total 70,200. Less drawings 10,000. Add goods withdrawal 1,000. Add interest on drawings 500. Total 11,500. Total 58,700. Shankar 1,20,000. Add interest on capital 12,000. Total 1,32,000. Less loss 39,800. Total 92,200. Less drawings 20,000. Add goods withdrawal 2,000. Add interest on drawings 1,000. Total 23,000. Total 69,200. Non-current liabilities. Shiv's loan 20,000. Current liabilities. Provident fund 4,000. Outstanding salary 1,400. Outstanding interest on Shiv's loan 900. Bank overdraft 18,000. Traders 16,000. Add unrecorded purchase 1,000. Total 17,000. Bills payable 14,000. Total of capital liabilities 2,03,200. Asset debts. Non-current assets. Fixed assets. Factory building 1 lakh. Customers 20,000. Less wrongly recorded 3,000. Total 17,000. Less bad debts reserve from adjustment 3,000. Total 14,000. Less discount reserve 1,400. Total 12,600. Bills receivable 30,000. Cash balance 6,000. Debt stock 22,000. Closing stock 32,000. Prepaid insurance 600. Total of asset debts 2,03,200. Illustration 6. Govind and Gopal had started partnership firm on 1st April 2016. Partners are entitled for 5% interest on capital. 10% commission is payable to Gopal on profit after deduction of commission from the profit. partners sharing profit and loss in the proportion of 3:2. There are several mistakes in the trading account and profit and loss account prepared by an inexperienced accountant. You are asked to prepare revised annual accounts from the given trading account, profit loss account, and list of assets and liabilities and other information. Trading account and profit and loss account as on 31st March 2017. On debit side, to purchase 2,48,600, add goods return credit 2,400, total 2,51,000, add closing stock 50,000, total 3,01,000. To wages 11,200, to carriage inward 8,000, less to carriage outward 4,000, total 4,000. To salary 18,000, to rent 12,000, to postage expense 600, to sundry expense 1,200, to telephone expense 1,600, to Govind's drawing 6,000, to Gopal's drawing 4,800. Total of debit side 3,60,400. On credit side, buy sales 3,32,400, less goods returned debit 600, total 3,31,800. Buy interest 600, add discount received 800, total 1,400. Buy net loss 27,200. Total of credit side 3,60,400. The position of assets and liabilities as on 31st March 2017 was as follows. Assets, stock rupees 50,000, debtors 1 lakh, furniture 20,000, building 50,000, cash on hand 6,000, bank balance 24,000. Liabilities, creditors 40,000, bills payable 14,000, capital of Govind 1 lakh, capital of Gopal 30,000. Adjustments. Number 1. Write off bad debts of 2,800. Number 2. Provide 2% discount reserve on debtors. Number 3. Maintain bad debts reserve of rupees 7,200. Number 4. Provide 5% depreciation on furniture and building. Answer. Revise trading account of Govind and Gopal's partnership firm for the year ending on 31st March 2017. On debit side, to purchase 2,48,600, less goods returned 600, total 2,48,000. To wages 11,200, to carriage inward 8,000, to profit and loss account 1,12,800. Total of debit side 3,80,000. On credit side, buy sales 3,32,400, less goods returned 2,400, total 3,30,000. Buy closing stock 50,000. Total of credit side 3,80,000. Profit and loss account of Govind and Gopal's partnership firm for the year ending on 31st March 2017. On debit side, administrative expense, to salary 18,000, to rent 12,000, to postage expense 600, to sundry expense 1,200, to telephone expense 1,600. Sales distribution expenses, to carriage outward 4,000, to discount reserve on debtors 1,800. Other expenses and losses. To bad debts from adjustment 2,800. Add bad debts reserve from adjustment 7,200. Total 10,000. Depreciation. To furniture 1,000. Add to building 2,500. Total 3,500. Profit and loss appropriation account. Net profit 61,500. Total of debit side 1,14,200. On credit side, by trading account, gross profit 1,12,800. By interest received 600. By discount received 800. Total of credit side 1,14,200. Profit and loss appropriation account of Govind and Gopal's partnership firm for the year ending on 31st March 2017. On debit side, to interest on partners' capital, Govind 5,000, Gopal 1,500. Total 6,500. To Gopal's commission 10%, 5,000. To partners' capital account, divisible profit, Govind 30,000, Gopal 20,000. Total 50,000. Total of debit side 61,500. On credit side, by profit and loss account, net profit 61,500. Total of credit side 61,500. Partners capital account. On debit side, 31st March 2017 to drawings account, Govind 6,000, Gopal 4,800. 31st March 2017 to balance carried down, Govind 1,29,000, Gopal 21,700. Total of debit side, Govind 1,35,000, Gopal 6,500. On credit side, 1st April 2016, by balance brought down, Govind 1 lakh, Gopal 30,000. 31st March 2017, by interest on capital account, Govind 5,000, Gopal 1,500. 31st March 2017, by commission account, Gopal 5,000. 31st March 2017, by profit and loss appropriation account, Govind 30,000, Gopal 20,000. Total of credit side, Govind 1,35,000, Gopal 56,500. Balance sheet as on 31st March 2017, partnership firm of Govind and Gopal. Capital liabilities. Capital, Govind 1,29,000, Gopal 51,700. Total 1,80,700. Non-current liabilities. Current liabilities. Creditors 40,000. Bills payable 14,000. Total of capital and liabilities 2,34,700. Assets and debts. Non-current assets. Fixed assets. Furniture 20,000. Less depreciation 1,000. Total 19,000. Building 50,000. Less depreciation 2,500. Total 47,500. Current assets. Debtors 1 lakh. Less bad debts from adjustment 2,800. Total 97,200. Less bad debts reserve from adjustment 7,200. Total 90,000. Less discount reserve from adjustment 1,800. Total 88,200. Cash on hand 6,000. Bank balance 24,000. Closing stock 50,000. Total of assets and debts 2,34,700. Illustration 7. From the following trial balance dated 31st March 2017 and adjustments prepare final accounts of partnership firm of Parekh and Mehta. Trial balance as on 31st March 2017 of partnership firm of Parekh and Mehta. Debit balances. Opening stock 30,000. Purchase 4 lakhs. Debtors 1,50,000. Cash and bank 12,000. Rent taxes 3,000. Insurance premium 9,000. Salary 42,000. Carriage inward 18,000. Carriage outward 21,000. Recoverable claims 5,000. Advertisement suspense account 9,000. Furniture and fittings cost price rupees 30,000, 23,000. Office equipments cost price 15,000, 10,000. Tender deposit from 1st October 2016 6,000. Bills receivable 6,000. Bad debts 4,000. Electricity expenses 2,000. Total of debit balance 7,50,000. Credit balances. Capital Parekh 50,000. Mehta 50,000. Creditors 50,000. Sales 6 lakhs. Total of credit balance 7,50,000. Adjustments. Number 1. Closing stock was rupees 1,05,000. Number 2. A purchase bill of rupees 15,000 is received from creditors but not recorded. Number 3. Recoverable claims from insurance company settled for rupees 2,000. Number 4. From the advertisement suspense account, written off 50% as an advertisement expense of current year. Number 5. Provide depreciation at 5% on furniture and fittings and office equipments as per straight line method. Number 6. Rupees 1,000 paid in ad for insurance premium. Number 7. 12% interest is receivable on tender deposit. Number 8. Discounted bill of rupees 2,000 was dishonored on 30 March 2017, which was earlier discounted in the bank. Number 9. Provide 2% bad debts reserve on debtors. Answer. Trading account of partnership of Parekh and Mehta for year ending on 31st March 2017. On debit side, to opening stock 30,000, to purchase 4 lakh, add unrecorded 15,000, total 4,15,000, to carriage inward 18,000, to profit and loss account gross profit 2,42,000, total of debit side 7,05,000, on credit side by sales 6 lakhs, by closing stock 1,05,000, total of credit side 7,05,000. Profit and loss account of partnership of Parekh and Mehta for year ending on 31st March 2017. On debit side, administrative expense to insurance premium 9,000, less prepaid 1,000, total 8,000, to salary 42,000, to electricity expense 2,000, to rent and taxes 3,000, sales distribution expenses to carriage outward 21,000, to advertisement suspense 50% 4,500, other expense and loss to loss on recoverable claim 3,000, depreciation, furniture and fittings 1,500, add office equipments 750, to bad debts from trial balance 4,000, add to bad debts reserve from adjustment 3,040, total 7,040, to capital account divisible profit Parekh 74,785, Mehta 74,785, total 1,49,570, total of debit side 2,42,360, on credit side by trading account gross profit 2,42,000, by outstanding interest on tender deposit 360, total of credit side 2,42,360. Note: no transactions pertaining to partners' capital are given, like interest on capital, interest on drawings, and other personal transactions of partners. Thus, profit and loss appropriation account is not opened. Balance sheet of partnership of Parekh and Mehta for year ending on 31st March 2017. Capital liabilities Parekh 50,000, add divisible profit 74,785, total 1,24,785. Mehta 50,000, add divisible profit 74,785, total 1,24,785. Liabilities creditors 50,000, add unrecorded purchase 15,000, total 65,000. Total of capital liabilities 3,14,570. Assets debts fixed assets furniture and fittings 23,000, less depreciation 1,500, total 21,500. Office equipments 10,000, less depreciation 750, total 9,250. Current assets debtors 1,50,000, add dishonored bill 2,000, total 1,52,000, less bad debts reserve 2%, 3,040, total 1,48,960. Tender deposit 6,000. Advertisement suspense account 9,000. Less 50% written off 4,500. Total 4,500. Bills receivables 6,000. Closing stock 1,05,000. Cash bank 12,000. Add insurance company's settlement 2,000. Total 14,000. Less dishonored bill 2,000. Total 12,000. Prepaid insurance 1,000. Outstanding interest on tender deposit 360. Total of assets debts 3,14,570. Note: Number 1. Under straight line method of depreciation, depreciation is calculated on the cost price of furniture and fittings and office equipments. Number 2. On tender deposit, 6 months interest at 12% is calculated. Illustration 8. Jai and Prafulla are partners of a partnership firm sharing profit and loss in equal proportion. From the trial balance dated 31st March 2017 and additional information, prepare financial accounts of the firm. Trial balance of partnership firm of Jai and Prafulla as on 31st March 2017. Name of accounts: ledger folio, debit balance rupees, credit balance rupees. Capital and drawings: Jai, debit balance 12,000, credit balance 1 lakh. Prafulla, debit balance 16,000, credit balance 1,40,000. Current accounts: Jai debit balance 12,000. Prafulla credit balance 4,000. Good stock 11 April 2016 debit balance 60,000. Purchase and sales debit balance 2 lakhs. Credit balance 3,80,000. Goods returned debit balance 7,000. Credit balance 12,000. Cash and bank debit balance 3,700. Credit balance 15,750. Bills debit balance 18,000. Credit balance 14,000. Rent up to February 2017 debit balance 22,000. Building debit balance 1,20,000. Current year's depreciation on building debit balance 12,000. Railway freight debit balance 5,300. Furniture debit balance 84,600. Sale of furniture 11 October 2016 credit balance 14,600. Debtors and creditors debit balance 48,000. Credit balance 16,800. Salary debit balance 20,000. Insurance premium including rupees 3,600 for the year ending on 30 June 2017 debit balance 5,700. Bad debts and bad debts reserve debit balance 1,000. Credit balance 2,000. Lien of Prafulla from 1st October 2016 credit balance 20,000. Wages debit balance 11,000. Discount debit balance 650. Credit balance 850. Trading expenses debit balance 1,050. Advertisement expenses debit balance 8,000. Machines addition of rupees 12,000 on 31st December 2016 debit balance 52,000. Total of debit balance 7,20,000. Total of credit balance 7,20,000. Adjustments. Number 1. The value of closing stock is 7,60,000, out of which the market value of 10% goods is 20% less and the market value of 20% goods is 10% less. The remaining goods of 42,000 is valued at 25% less than book value. Number 2. Provide 10% interest on capital, 9% on balance of current accounts and 12% on drawings. Number 3. Monthly salary of rupees 700 is payable to Jai. He has withdrawn salary of 4 months which is included in salary. Number 4. Prafulla has introduced additional capital of rupees 20,000 on 1st January 2017. Number 5. Jai has withdrawn rupees 1,000 per month on the last date of each month. Prafulla has withdrawn on 1st October 2016. Number 6. Calculate depreciation at 9% on machines and 5% on furniture. Number 7. Prafulla has withdrawn goods of rupees 2,000 on 1st December 2016 which is recorded in the sales book at rupees 2,400. Number 8. One debtor of rupees 2,400 became insolvent and 40 paise per rupee dividend is receivable. Trading account of partnership firm of Jai and Prafulla for the year ending on 31st March 2017. On debit side, to opening stock 1st April 2016 60,000. To purchases 2 lakh. Less purchase return 12,000. Total 1,88,000. Less goods withdrawn for personal use Prafulla 2,000. Total 1,86,000. To railway freight 5,300. To wages 11,000. To profit and loss account gross profit 1,55,400. Total of debit balance 4,17,700. On credit side, buy sales 3,80,000. Less withdrawn goods for personal use 2,400. Total 3,77,600. Less sales return 7,000. Total 3,70,600. By closing stock 47,100. Total of credit balance 4,17,700. Profit and loss account for the year ending on 31st March 2017. On debit balance, administrative expenses to salary 20,000. Less Jai's salary 2,800. Total 17,200. To rent 22,000. Add outstanding 2,000. Total 24,000. To insurance premium 5,700. Less prepaid 900. Total 4,800. To trading expenses 1,050. Sales and distribution expenses To advertisement expenses 8,000. To discount 650. Financial expenses. To interest on loan of Prafulla at 6% 600. Other expenses and loss. To bad debts from trial balance 1,000. Add bad debts reserve from adjustment 1,440. Total 2,440. Less bad debts reserve from trial balance 2,000. Total 440. To depreciation, building 12,000, machines 3,870, furniture 3,865, total 19,735. To profit and loss appropriation account, net profit 79,775. Total of debit balance 1,56,250. On credit side, by trading account, gross profit 1,55,400. By discount 850. Total of credit balance 1,56,250. Profit and loss appropriation account for the year ending on 31st March 2017. On debit side, to interest on capital at 10%, Jai 10,000, Prafulla 12,500. Total 22,500. To interest on current account at 9%, Prafulla 360. To salary 700 into 4 months, Jai 2,800. Add outstanding rupees 700 into 8 months, 5,600. Total 8,400. To current account, divisible profit 1:1. Jai 25,648. Prafulla 25,647. Total 51,295. Total of debit side 82,555. On credit side, by profit and loss account, net profit 79,775. By interest on current account at 9%, Jai 1,080. By interest on drawing at 12%, Jai 660, Prafulla 1,040. Total 1,700. Total of credit side 82,555. Partners' current accounts. On debit side, date particulars, Jai, Prafulla. 1st April 2016, to balance brought down, Jai 12,000. To drawings account, Jai 12,000. 1st October 2016, to drawings account, Prafulla 16,000. 1st December 2016, to drawings account, that is goods, Prafulla 2,000. 31st March 2017, to interest on current account, Jai 1,080. 31st March 2017, to interest on drawings account, Jai 660, Prafulla 1,040. 31st March 2017, to balance carried down, Jai 15,508, Prafulla 23,467. Total of debit side, Jai 41,248, Prafulla 42,507. On credit side, date particulars, Jai, Prafulla. 1st April 2016, by balance brought down, Prafulla 4,000. 31st March 2017, by interest on capital account, Jai 10,000, Prafulla 12,500. 31st March 2017, by interest on current account, Prafulla 360. 31st March 2017, by salary account, Jai 5,600. By profit and loss appropriation account, divisible profit, Jai 25,648, Prafulla 25,647. Total of credit side 41,248, Prafulla 42,507. 1st April 2017, by balance brought down 15,508, Prafulla 23,467. Balance sheet as on 31st March 2017. Capital liabilities, fixed capital accounts, Jai 1 lakh. Add Prafulla 1,20,000. Add addition on 1st January 2017 20,000. Total 2,40,000. Current accounts, Jai 15,508. Prafulla 23,467. Total 38,975. Non-current liabilities, loan of Prafulla 20,000. Current liabilities, creditors 16,800. Bills payable 14,000. Bank overdraft 15,750. Outstanding interest on loan of Prafulla 600. Outstanding rent 2000. Total of capital liability 3,48,125. On assets and debts, non-current assets, fixed assets, building 1,20,000. Machines 1st April 2016 40,000. Add addition 31st December 2016 12,000. Total 52,000. Less 9% depreciation 3,870. Total 48,130. Furniture 84,600. Less sales 14,600. Total 70,000. Less 5% depreciation 3,865. Total 66,135. Current assets. Closing stock 47,100. Debtors 48,000. Less recorded by mistake 2,400. Total 45,600. Less bad debts from adjustment 1,440. Total 44,160. Cash 3,700. Bills receivable 18,000. Prepaid insurance premium 900. Total of assets and debts 3,48,125. Illustration 9. Mahi and Rahi are partners sharing profit and loss in the proportion of 6:4. From the given trial balance dated 31st March 2017 and adjustments, prepare final accounts of partnership firm. Trial balance of partnership firm of Mahi and Rahi as on 31st March 2017. Debit balances. Drawings. Mahi 3,000. Rahi 2,000. Total 5,000. Opening stock 1,750. Purchase 1,38,750. Traveling expenses. Rahi 3,000. Salesman 5,250. Salary. Accountant 2,500. Collection clerk 1,250. Shop rent 900. Debtors 5,000. Carriage. Goods 7,500. Advertisement expense 10,000. Prepaid rent of shop 1st April 2016 75. Discount and allowance 4,250. Donation expense 10,000. Income tax 12,500. Professional tax 125. Bank overdraft interest 6,000. Bank commission 250. Share of SBI 500. Fixed assets 1,250. Fixed assets maintenance 500. Cash balance 450. Goodwill 25,000. Total of debit side 2,41,800. Credit balances. Capital accounts. Mahi 20,000. Rahi 12,500. Sales 2 lakh. Purchase return 1,250. Discount and allowance 1,250. Dividend on share of SBI 50. Bank account 3,000. Creditors 1,250. Loan borrowed from friend 2,500. Total of credit side 2,41,800. Adjustments. Number 1. Provide 12% interest on capital of partners and 5% on drawings. Number 2. 3% commission on sales is payable to Mahi. Number 3. Every month Rs 300 is payable to Rahi for travelling expense done for business. Number 4. Rs 50 interest is outstanding on loan of friend. Number 5. Shop rent is paid for 12 months for the year ending on 30 April 2017. Number 6. Provide 20% depreciation on fixed assets. Number 7. There is doubtful recovery of Rs 250. Number 8. Closing stock Rs 19,025. Answer. Trading account of partnership firm of Mahi and Rahi for year ending on 31st March 2017. On debit side, to opening stock 1,750. To purchase 1,38,750. Less purchase return 1,250. Total 1,37,500. To carriage 7,500. To profit and loss account 72,275. Total of debit side 2,19,025. On credit side, by sales 2 lakh. By closing stock 19,025. Total of credit side 2,19,025. Profit and loss account of partnership firm of Mahi and Rahi for year ending on 31st March 2017. On debit side, administrative expenses. To salary of accountant 2500. To professional tax 125. To shop rent 900. Add prepaid of 2017, 1st April 2016 75. Total 975. Less prepaid of 2018 on 1st April 2017 75. Total 900. Sales distribution expenses. To salary of collection clerk 1250. To advertisement expense account 10,000. To salesman travelling expense 5250. To discount allowance account 4250. To other expenses and loss account. To bank overdraft interest account 6000. To bank commission account 250. To fixed assets maintenance account 500. To outstanding interest on loan of friend 50. To donation expense account 10,000. To depreciation on fixed assets account 250. To bad debts reserve account 250. To income tax account 12,500. Profit and loss appropriation account net profit 19,500. Total of debit side 73,575. On credit side, by trading account gross profit 72,275. By discount allowance account 1,250. By dividend on share of SBI 50. Total of credit side 73,575. Profit and loss appropriation account of partnership firm of Mahi and Rahi for year ending on 31st March 2017. On debit side, interest on capital Mahi 2,400, Rahi 1,500. Total 3,900. To travelling expense account Rahi 3,000. Add outstanding 600. Total 3,600. To Mahi's commission account 3% 6,000. To partner's capital account divisible profit Mahi 3,750. Rahi 2,500. Total 6,250. Total of debit side 19,750. On credit side, by profit and loss account net profit 19,500. By interest on drawings Mahi 150. Rahi 100. Total 250. Total of credit side 19,750. Partners capital accounts. On debit side, date, particular, Mahi, Rahi, 31st March 2017. To drawings account, Mahi 3,000, Rahi 2,000. 31st March 2017. To interest on drawing account, Mahi 150, Rahi 100. 31st March 2017. To balance carried down, Mahi 29,000, Rahi 15,000. Total of debit side, Mahi 32,150, Rahi 17,100. On credit side, date, particular, Mahi, Rahi. 1st April 2016, by balance brought down, Mahi 20,000, Rahi 12,500. 31st March 2017, by interest on capital account, Mahi 2,400, Rahi 1,500. 31st March 2017, by travelling expense, Rahi 600. 31st March 2017, by commission account, Mahi 6,000. 31st March 2017, by profit and loss appropriation account divisible profit, Mahi 3,750, Rahi 2,500. Total of credit side, Mahi 32,150, Rahi 17,100. Balance sheet of partnership firm of Mahi and Rahi as on 31st March 2017. Capital and liabilities. Capital account Mahi 29,000, Rahi 15,000. Non-current liabilities. Loan borrowed from friend 2,500. Current liabilities. Bank account 3,000. Creditors 1,250. Interest outstanding of friend's loan 50. Total of capital liabilities 50,800. Assets, debts, non-current assets, fixed assets, tangible assets. Fixed assets